Jambo. Welcome to this video where we look at part cancellation. In our previous video, we looked at situations where items cancelled out with each other completely, and we consolidated those that remained uncancelled. In this video, we're looking at items where an item may appear in the statement of financial position of a parent company, added subsidiary, but not at the same amount. In particular, we've got four situations. A, the parent company may have acquired shares in the subsidiary at a price greater or less than their par value. The asset will appear in the parent company at cost, while the liability will appear in the subsidiary account at par value. This will raise the issue of goodwill, which we'll deal in a later video. The second scenario is where a company may have acquired the shares at par value, but may not have acquired all of them. And we have a situation where the subsidiary is not a wholly owned subsidiary, but a partly owned subsidiary. This will raise the issue of non-controlling interests, which again we'll look at in a different video. We may have some intra-group trading within the group. For instance, a subsidiary may sell goods on credit to parent company. Parent company would then be a receivable in the account of subsidiary, while subsidiary company would be a payable in the parent in the account of parent. Ideally, those two items should cancel out each other completely. The only issue would arise if those figures are of unrelated amount. And if they are of unrelated amount, then the issue of intra-group trading or the issue of goods or cash in transit will arise. We shall look at goods in transit in this video. The last scenario is one company may have issued loan stock all alone, of which a proportion only is taken up by the other company. And thus, when we cancel out, we find that they don't cancel out completely. We have an illustration which will consider scenario C and D. Just like in the previous video, we'll cancel out as far as possible, and the remaining uncancelled amount will appear in the consolidated statement of financial position. The uncancelled loan stock will appear as a liability of the group, while the uncancelled balance on intra-group trading account will represent goods or cash in transit, which will appear either as a liability or an asset in the consolidated statement of financial position. Please take a minute and look at this question. Thank you. The key thing to note is that P owned all the ordinary shares in S and 40% of the loan stock since its incorporation. Remember, we said our goal is to cancel out as far as possible. For instance, these 80,000 ordinary shares should cancel out this figure. 80,000 ordinary shares should cancel out with the share capital of the subsidiary. And on consolidation, will only show the share capital of the parent. I've noted these and the loan stock. This 20,000 loan stock. It should cancel out with the loan stock with the subsidiary. But notice there is some uncancelled amount amounting to 30,000. This now will appear as a liability when we finally consolidate. And the other amount that I want us to look at, the other amount that you'd have noted is current account with S and also current account with B company. This figure here, current account with S, should cancel out with this figure here, current account with P. But you notice we'll end up with part cancellation, and there'll be a remaining amount of 6,000, which will represent what we refer to as goods in transit. And thereafter is to add up the uncancelled items. These two will add up. This cancelled out with this figure here. And therefore, it will be 1,000. Then the loan stock cancelled out and therefore would have a liability. Do we add up the other figures? And when we finally present our financial statement, we'll end up with something like that. Some need to work. All right. Note that the uncancelled loan stock in S becomes a liability of the group. Good in transit difference. Good in transit is the difference between current account and the investment in S is cancelled with the S company's share capital. Please do not forget to subscribe to this channel and you like the video. Asante.